of the most powerful forces in the market right now is the expectation of deregulation. Stocks have been moving on it. Corporate executives have been talking about it. We've already seen the president sign executive orders that target some of the rules governing the financial and energy industries, and we've reported on the potential impact. Tonight, we look at how scaling back rules and regs could impact the broader market and the economy. We begin with Bob Pisani at the New York Stock Exchange.
There are two components of the broad Trump rally: tax cuts and deregulation. Now, there are many studies that indicate cutting corporate taxes could increase earnings 8% or more, but studies on the boost from deregulation are much more difficult to do because of the tens of thousands of different laws out there. Just not possible to get a number right now. But no matter, let me show you why the street believes reducing regulations can help on earnings and its close cousin, margins. Margins are probably the single most important metric for those looking at profitability trends. Thomson Reuters says S&P 500 margins have been stuck in roughly the same range for the last several years, about 10%. Now, why can't margins improve at all? It's a big issue for the street right now. One of the primary problems is that sales growth has been stagnant. Well, the cost of doing business, the cost of materials, for example, and the direct labor costs used to produce the goods has been rising. That's a problem. This is where excessive regulations show up indirectly on the income statement. So if you look at big industrial names, Caterpillar, for example, fewer regulations will help drive down the cost of materials and labor. That goes right to the bottom line. And banks could see a dramatic savings from a reduction in their costs of employees. This could make a big difference in a company like JP Morgan. JP Morgan CEO Jamie Dimon has been railing for years about compliance costs. There's about 240,000 employees at JP Morgan. 18% of them are in compliance. Think about this. 1 out of every 5 people at JP Morgan are involved in looking at what the other 4 are doing. The Commerce Department just began the first of many salvos to reduce regulations on March 7th. They're asking the public for information on the most burdensome regulations for domestic manufacturers. You could submit comments on regulations.gov. You'll hear a lot more about this in the coming months, but you can already see why Wall Street is enthusiastic that a reduction in regulations is a second crucial aspect of the Trump agenda. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.